Hello, I'm Brent Wilsey. With me is Chase Wilsey. We're from Wilsey Asset Management. And remember, if you like these posts, please hit the like button. Or if you think they're pretty good, you want other people to see them, your friends, and them learn as well, well, share them with them. It's free information to help them out. All right, today we're talking about our 5-star funds, really 5-star. Now, in case you're not sure what we're talking about the Morningstar rating that is kind of like the industry standard. Everybody says, oh, it's a 5-star fund and so forth. We looked into this, and maybe this is not such a great thing, is it?
Yeah, I mean, this is one thing the average investor will kind of take a look at. You know, 401ks are a big group of people where they have to invest in mutual funds most of the time. So they're like, okay, let's take a look at Morningstar rating. Are they a 5-star fund? Another thing they look at is prior performance in the past years or the expense ratio. All things that you really shouldn't be looking at when you're evaluating a mutual fund.
And also, too, this is really just looking at past performance and not guarantee future results, but that's what the 5-stars do. And actually, this was kind of amazing to me, this data. After 10 years of investing in a fund, only 14% still have a 5-star rating.
Yeah, that is crazy. I mean, 68% of them lost 1 to 2 of their stars, and then 17% of those funds lost 3 to 4 of those stars. That means some of them were a 1-star fund after 10 years. That means you probably lost a lot of money if you were investing in them.
And what it is you're still buying the past performance. What you need to do when you're looking at investing is understand the philosophy and the concept of how they invest. Like again, we buy small pieces of large companies. We don't overpay for them and so forth. We look at the financial statements. You need to understand what the investment philosophy is.
Yeah, I mean, you wouldn't just buy some random house if you're doing that. You need to understand what you're buying before you actually jump into it.
Yeah. So forget about those 5-star ratings. They do not help you. It's become the industry standard. A lot of brokers go by, oh, it's a 5-star fund. You can again see from this right here, it is not a great way to do your investing. That's maybe why the average investor gets what?
2.5% on average per year.
Yep, exactly. All right, let's talk about the economy. Jobless claims came out, 265,000. Some great news on this one, isn't it?
Yeah, this is the 55th reading in a row that's been under 300,000.
Right.
This is the longest stretch since 1973 that we've seen under 300,000.
That's well over a year, isn't it? Under 300,000.
Yeah, and then also a thing to think about here is in 1973, the employment base was a lot smaller. So 300,000 as a percentage of that compared to now was much bigger.
So we're not talking percent, we're talking numbers. So you're right. So the employment base, that's a big number. That makes a big difference. So again, people, the economy's not that good. This shows that economy is doing okay. I'm not gonna say it's great, doing okay. So let's talk about energy a little bit because we had some major things here. The U.S. Oil and natural gas rigs at the 1940 level?
At least the 1940 level. Crazy. I mean, the total now in the U.S. stands at 464 rigs. Even just going back to last year, 1,048 rigs. So we've seen a huge decline in the rigs over the past year.
Right. Now this is U.S. and I actually looked at the world rigs because it's the same thing. 2012, they had about 3,600 plus rigs pumping oil. As of today, that's cut in half, around 1,761. So where's all this oil coming from?
You know, one thing that I think has happened is rigs have become a little more efficient, but I don't think they've become twice as efficient.
Right.
So, I mean, they're still going to be, we think, this bottleneck of oil, and it's going to burst on the scene.
It's going to happen very quickly. When it moves, it's going to move quickly because all of a sudden you can't just, turn the switch and these come back on. It takes a while. You got to hire the crews back. You've got to, oil them, get them all ready to go and everything. So it takes time to get those back and running. I think we will see in the future an oil shortage, not a major one, but a crunch, as I call it. Not quite enough. So,
I mean, we did see how quickly it moved from 26 to 40. That was a huge return very quickly.
Yeah.
I mean, that could be going forward as well.
Our recommendation, make sure you have some good quality oil companies in your portfolio.
Keyword there, quality.
Exactly. All right, speaking about quality, let's take a look at the company, Kroger, the grocery store. I haven't looked at grocery stores. Let's take a look at the grocery store for you. Current price around $37.65, the 52-week high, $42.75. The low, $27.32, so right about the mid-range there. Let's look at some numbers here for you. Receivable turnover, 73.22. We kind of expect that for a grocery store, wouldn't we?
Yeah, and it was above the industry average, too, of I think it was around 35. And, I wanted to point this one out today because I don't think we've talked about it. This is such an important measure to take a look at. You want to make sure a company's collecting on the receivables and converting those to cash. You don't just want the receivables sitting out there saying, people are out there.
And what they do, they look at sales, like, well, sales are up. But you got to collect on those sales. That's the accounts receivable. So look at that number. Also, debt to equity. Ooh, not very good, is it?
No, it seems like a lot of these companies we're taking a look at is, high debt to equity. This one comes in near 180%. We don't like that. And one thing I want to point out here too is we are very, very picky when it comes to buying companies. These high debt companies will not make the cut for us.
Right. And also, too, we do always look at the target sell price for you. January 18th, the earnings going forward, $2.45. Target sell price, $40.43, so nothing really there worth looking at.
Yeah,
So,
I would maybe go shopping, but hey, stay away from the stock right now.
yeah. So we look at different companies for you. If you got a company you want to look at or have us look at, give us a call or send us an email or on Facebook. Let us know. We'll take a look at it. We're trying to get you different companies so you'll understand more about investing and how to build a good quality portfolio. So I know this investing thing like, oh my gosh, this is too hard. I don't want to do it and so forth. That is why we're here for you. Give us a call at 858-546-4306 or visit the website smartinvesting2000.com.
And don't miss any upcoming daily briefings. Join our Facebook group, Smart Investing with Brent and Chase Wilsey.